Thank you very much for the invitation. It has been a long time since I thought about saving for old age, and I couldn't resist Olivia's invitation. In a little change in my comments today, I'm going to focus on the findings of a new database on financial inclusion that we've been putting together at the World Bank. And we've just released the latest round of the data at our spring meetings 2 weeks ago, so the paper is very much in the making, so apologies to my discussant. So as I said, I'm going to be speaking from the perspective of financial inclusion and what it means for saving, for risk management and financial resilience, and of course savings for old age. The paper is joint effort with Leora Clapper, who's also at the World Bank, Georgios Panos University of Glasgow. So, in the interest of time, I'm going to skip through this slide fairly quickly because this audience knows why this issue is important. Clearly, there is little work done investigating how households make savings plans, and there's little data on savings decisions. This is important for a whole bunch of things, particularly retirement and old age security. In our paper, what we try to do is we try to use this unique data to actually examine the occurrence of saving for old age, and also to examine the determinants of the incidence of saving for old age, accounting for a rich sort of number of individual level characteristics, country level macro characteristics, as well as pension system characteristics. So first, let me give you a little bit of background on financial inclusion. We have been working on financial inclusion for over a decade now. We do know financial inclusion is crucial for reducing poverty and improving welfare and growth. And last year's focus of the Global Financial Development Report was on financial inclusion, where we synthesized a lot of the evidence why people, particularly poor people, benefit greatly from using basic payments, savings, and insurance services. This is true because without access to financial services, poor people cannot save and pull themselves out of poverty. They cannot be entrepreneurs. They cannot start businesses. They cannot invest in their education or their old age, and obviously can't manage risk and absorb financial shocks. Financial inclusion is also shown to be particularly important for women and women's empowerment, because having a safe place to save your savings outside of the home is very important for giving them the ability to control their finances. So this whole financial inclusion agenda is an important one, but this is also where Global Findex comes in, because it's very difficult in development or anywhere else to focus policy attention unless you can benchmark things and track progress. So for the first time, with Global Findex, in partnership with the Gates Foundation and World Poll, we were able to systematically measure financial inclusion around the world by surveying over 150,000 individuals in over 140 countries, representing 98% of the world's population. So in 2011, is when we did that. This was the first time we were able to provide a global glimpse of how individuals borrow, make payments, and manage risk and save. So this is a 10-year project. So every 3 years we collect data. The first time when we collected it in 2011, the figures show that around half the world's adult population is unbanked. So 2.5 billion people did not have a bank account. And we consider having a bank account as a marker of financial inclusion because it's the first step in being included in the financial system. Now, this led to a lot of awareness. Over 50 countries adopted financial inclusion strategies. There were a lot of efforts and different policies that were undertaken to address this issue. And we did the second round of the survey over 2014. And the results were, as I said, released 2 weeks ago. And there we saw that there was much progress. Now, compared to last round, now around 61% of the world's population is actually, included in the financial system. So the number of unbanked has gone down from 2.5 billion to just under 2 billion people. And in individual developing countries, we see that they have all managed to improve inclusion, but there are still different areas where there could be improvement. One area is certainly the inclusion of women. Men are better included than women, and through these 3 years, there has been improvement for both men and women, but there's globally a 7% gap that is stable and still there. And in developing world, this is about 9%. Another area where there has been improvement is the inclusion of the poorer segment of the society. When you look at the lower 40%, they've improved by 17%, but nevertheless, still over 50% of those people are still unbanked. So leaving these more general issues aside, there is a whole range of statistics that we provide in the paper that accompanies the database, which is publicly available, by the way, on our website. What is interesting, I think, for this audience is how people save, because Global Findex also provides a glimpse of the savings around the world. And globally, we see that about 56% of adults report that they save, and savings defined as having saved or set aside money over the last year. And you can see across regions, there's quite a bit of variance. High-income OECD economies, over 70% of the adults reported that they've saved. Similarly, in East Asia and Pacific. And even in Africa, you can see 60% of the adults report having saved or set aside money over the last year. Now, what's also interesting from this figure, though, is how in different methods used to save across different regions. Actually, globally, only about a quarter, half of all savers save formally. This is obviously much higher when you look at more developed regions. But say, for example, in Africa, we see that a large segment of the population actually save informally, or what we call semi-formally. These are, for example, through rotating savings associations where individuals deposit periodically a certain amount of money, which is then given to one member at regular intervals. So these things are very common. And they do provide certain benefits that potentially formal institutions do not provide. But we meet women when we do this survey that actually save with 5 different Roskas. And when we ask them why they do that, they say, well, they figure the first 4 would steal their money. So there is a cost of security associated with these types of saving methods. And interestingly, by far, the most common method used to save all around the world is other methods, which is saving under the mattress, cash, jewelry, livestock, or real estate. In the high-income countries, this includes stocks and bonds, so it's not exactly the same. But we do see that a lot of people are actually saving, but most of them outside of the formal financial system. system, and there's certainly room to improve and provide, produce different types of technologies and instruments to bring these savings to the formal financial system. The other question that Global Findex asked was whether it was possible for individuals to come up with a small sum, about 5% of the average annual income. In the US, it's about $2,500 or so. And if they are able to come up with this at short notice, what would be the source they would use? So interestingly, about 75% of adults worldwide say that it is possible to come up with this money. Obviously, the sources, again, vary quite a bit, whether it's friends and family, an employer. But 1.2 billion adults, about 30% globally, say that they would use their savings for this. So they are saving. And again, it's interesting that more than half of these people that report that they would use their savings do not have a bank account. So they are not formally in the financial system. Okay, so another stylized fact from this data, which would be of interest to you, we asked what are the purposes for savings. So the three main purposes are old age, education, and to start, operate, and expand the business. And there's also another sort of catch-all purpose, which was about 15%. But globally, we see that for old age, 25% of the adults reported that they save for old age. And of course, again, there is significant variance across the world in different regions. You do see that in high-income OECD economies, this is about 40%. Again, East Asian Pacific, where there's much greater awareness of aging populations, it's close to 40%, but the remainder of the regions is around 10% or so. And you're interested, you can see that this varies also within regions in different countries, and the blues and the greens are lower percentages, and the darker colors, higher percentages. Okay, the other thing, again, is of interest to us, even those who are reporting to be saving for old age, there's a certain proportion in different regions that are not included in the financial system, so they're doing this outside of the financial system. Then we look at certain breakdowns. For example, by gender, you do see various sort of moderate differences across sexes when you look across the regions. Clearly, men tend to save more for old age. Just go through these very quickly. By employment, again, as expected, employed, not employed differences exist, but again, to the extent to which this differs is different across different regions. By age, I think these are interesting because you do see these J-type of figures where you see low and more delayed incidence in different regions. So individuals start saving later. When you look at by education, again, as expected, more educated people tend to be more likely to be saving for old age, but the extent to which education has an impact seems to be different across regions as well. I just want to say that this is very much, again, in the making. So the figures and the stylized facts I showed you, we're trying to explore more formally in a regression setting. We're looking at individual characteristics, the macro characteristics, and the pension system characteristics. And for the very preliminary conclusions, I can tell you, again, just to recap, about 25% around the world save for old age. Rates about 35%, high-income OECD and East Asian Pacific. There are moderate gender gaps, larger in the developing world, large age differences. We see a J-shaped profile indicating delayed occurrence. There's also large and varying differences by income, education, and employment. And when we started to examine the determinants of this incidence, we do see a strong sort of relationship with financial inclusion, strong relationship with the country's own propensity to save. Also, there are cultural and historical factors that seem to have an impact. And I think one other very striking factor that sort of jumps out at you from the data is in general, how prevalent saving is around the world, regardless of individuals' income levels. And very specific randomized evaluations had already shown this in different parts of Africa. But when we look at it globally, we do see that individuals save. I think the issue is that the methods of savings vary, and the savings are not always in a safe place. So this is another interesting finding. So please stay tuned for more. We'll be working on this paper to deliver on our commitment to Olivia, and we just received the data 2 weeks ago, so this is all I can offer right now. Thank you very much.